One of the fastest growing companies is down nearly 60% from its all-time highs. The Skillz mobile gaming platform, is it a buy or a sell after the recent correction? In this video, I'll be explaining why I think Skillz will be a dominating company in the next few years. I'll be explaining the strong fundamentals of the company, how much ARK Invest has been buying this company, and whether or not the recent short seller report is complete fugazi or legit. Let's do it. What's up everybody, it's Krishna, and today I'll be covering all things Skillz, which trades under ticker symbol SKLZ. This stock has been beat down like crazy due to the recent tech correction and recent short seller report that came out. ARK also most recently bought this stock on Thursday, March 25th. I'm sure you've seen several service level videos on Skillz so far, but in this video, we're going to go into the details of why Skillz could be your next 2x stock. So in 1 minute, for those of you who don't know, Skillz is a mobile gaming platform where people from all around the world can play games involving skills to potentially win money. Skillz is a very unique player in the mobile gaming space because it's not just a mobile gambling game to win money like a slot machine, but rather it's comprised of skill-based games like chess, pool, and solitaire to win money. There aren't many skill-based mobile games with the opportunity to win cash prizes yet, so Skillz almost has a first mover advantage. Kind of. The mobile gaming space is a rapidly growing sector as people are spending more and more time at home playing mobile games than they are playing physical games outside. The mobile gaming industry is on track to be larger than the NFL, the NBA, the MLB, and the NHL combined. That's big, guys. Skillz is a huge player in the sector, and they're definitely considered a disruptor. In 2017, which is almost 4 years ago, Skillz was ranked #1 and was the fastest growing company in the mobile gaming space. That was 4 years ago, guys. Think about how much growth they could have had since then. They were also the first mobile gaming company to be in the CNBC Disruptor 50 list. Skillz also has a unique business model when compared to the rest of the gaming industry. Users pay a small fee to enter a tournament on the Skillz app, and a percentage of that goes to developers, a percentage goes to the winner through a cash prize, and a percentage is kept as profit. They also profit from in-game ads and sponsorships. Within the next 5 to 10 years, I could totally imagine that Skillz will be an absolute beast of a company. Skillz has been a rapid growing company, and they recently released that they had a whopping 95% year-over-year revenue growth. This company nearly doubled its revenue in just the last year alone, which is phenomenal growth. They also reported 121% paying MAU growth, which means that the number of users on their platform that are paying to enter a contest increased by 121%. Just by these two statistics, you can see that Skillz is a growth beast. It's important to note that their growth has been very consistent and sped up immensely during the pandemic. One thing to note though is that even after the recent dip, Skillz still trades at a pretty high price to sales ratio of about 25. So the question arises, how much has Cathie Wood been buying? Cathie Wood was quoted in an interview with CNBC saying that in a correction, ARK would sell some of their losing plays for tax purposes and reposition their money into the highest conviction stocks. Basically, Cathie Wood said that they would be buying heavily into companies that are likely to go up after a correction. And this is exactly what we're seeing ARK do right now with Skillz. ARK has been buying the dip in Skillz in a massive amount. On March 11th, ARK bought 632,000 shares of Skillz, and on March 25th, ARK bought an additional 745,000 shares. ARK has a total of about 6 million shares in Skillz, which shows that they have a very bullish long-term outlook on the company moving forward. Wolfpack Research recently released a short seller report which seems to be misleading. They had a few good points, but they also had a few incorrect points. First, let's start with their accurate points. Wolfpack mentioned that Skillz has a majority of their revenue coming from just 3 games, which is true and it could be a cause for concern. This means that their top 3 games are much better than the rest of their games. But it's important to note that if they can make this much revenue from just 3 games, we could expect significant revenue growth to continue for Skillz as they improve and introduce more games. Another valid point was regarding the valuation of Skillz. Skillz trades at a pretty expensive price to sales ratio, and it's still a relatively small and growing company, which means that there is risk involved. But once again, it's important to note that the price to sales is not the only way a company can be valued. Next are some of the flaws that were in the short seller report from Wolfpack Research. The report compared the valuation of the company after it became public to its previous private valuation the year before. The problem with this is that Skillz saw a large amount of growth over that year. Skillz was a much larger company after it became public, so it's only fair that the valuation increases significantly as well. Additionally, the private valuations are always less than the public valuations because private investors are more conservative. They need a safer valuation because they're tied in with that company for a long amount of time, because private equity is not as liquid as public equity. The report also mentioned that the monthly active users decreased from its high. This is extremely misleading because the amount of paying users actually increased. The paying users is a metric that matters much more than the total monthly active users. In an investor presentation, the management team stated that they are focusing on increasing the paying users because they are not currently monetizing the rest. This makes perfect sense. They're shifting their focus to increasing the paid user count because that's where the revenue is actually generated from. Shareholders would rather see revenue increase by high amounts like 95% rather than non-paying users increase. Finally, the short seller report released false news saying that Skillz was removed from the Google Play Store, which is just inaccurate information. The app is still on the Google Play Store and it works perfectly. It's pretty clear that Wolfpack Research was just trying to beat this stock down because they're probably a short seller for this stock. That's good news for us though, because it means we can potentially pick up this stock at a very low price. I think Skillz could be a stock to pick up at a low price if you're willing to hold it for several years. It's hard to tell how low this stock will go because it could keep dipping from here, so do your own due diligence. I think that this stock could be a good buy anywhere under $18 because it's a rapidly growing company. I currently don't own any shares of this stock though, but don't be surprised if I pick up a few shares soon. As always, thanks for watching. Don't forget to click the like button and subscribe. Comment below what stock you want me to cover next. Peace.